First, I'd like to thank everyone on the call today for taking time out of your day and being with us. My name is Michelle, and our topic today is Hard Money Questions Answered. Our guest is Richard Behana from Behana Capital Advisors, LLC. Without further ado, here's our guest, Richard.
Thanks, Michelle. My name is Richard Behana, and I'm one of the investment officers for Behana Capital Advisors based in Pittsburgh, Pennsylvania. We are a commercial bridge funding source for commercial income-producing real estate deals, and we fund deals $2 million and higher throughout the United States.
What exactly is a bridge loan?
A bridge loan is a short-term first mortgage secured by commercial real estate. The terms vary from between 6 months to 24 months. Typically, bridge lenders such as us will not lend any higher than 65% loan to value of its as-is value, and the interest rates generally range between 11 and 16%.
What are some of the reasons why bridge financing is so appealing today? Why do folks need it?
Well, today, banks aren't lending money, and if they are, they're lending it to the most credit-worthy borrowers. A private capital provider such as Behana Capital Advisors allows investors to purchase good assets and participate in deals they probably would never be able to be involved in. As you know, a lot of banks are selling REOs for pennies on the dollar. The value we provide is that we can provide this financing for the acquisition and rehab of the asset with the expectation it will qualify for what we call takeout financing at some point later on.
The rates you charge are high. Is that normal?
Yes, we are a private capital firm, and we are not as rigorous as a traditional bank is in underwriting loans. Bridge financing, or hard money lending, has been around for years, and professional investors rely on private capital and will gladly pay those rates because it's the availability of the capital, not the cost of the capital, that makes sense to them. Imagine that you had the deal of a lifetime, but you couldn't find the funding for it. What would that be worth to you?
Great point. One thing I hear a lot about hard money lenders is upfront fees. Can you tell me about that?
Great question. First off, I'd like to say that Behana Capital Advisors has no upfront fees. That is a big complaint we hear from a lot of our clients about other hard money lenders. There are companies out there that charge large upfront fees to even look at your deal. This is something at Behana Capital Advisors we disagree with, and we don't charge any upfront fees. Only after a term sheet is agreed upon and signed is there any type of costs. At that point, we have a small commitment fee that is fully refundable at closing to cover the cost of any additional due diligence.
Can you tell me a little about how you qualify these deals? What information do we need to submit to you?
Well, when we're looking at deals, there's only a handful of specific things we look at to either give you a pass or a play. This is what we call the pre-qualification process. Let me take a moment to lay these out to you. First, we want to know about the asset's performance today. We call this the current net operating income, or NOI for short. This is a big piece of the puzzle, so make sure that in all your deal submissions that you have this information. Second, we want to know what the pro forma NOI is. This is telling us that after all repairs have been done and the property is performing to its highest and best use, what would we expect this dollar amount to be? To be sure, the NOI are numbers that are expressed in dollars per year. So we would say that the current NOI is $500,000 per year, and that the pro forma NOI would be $750,000. Does that make sense?
Yes, it does. Thank you.
Third, we want to know how much debt is on the property. This is important because it tells us if it's over leveraged or not as compared to its value. Fourth, I want to know what are the sources and uses. This is the total dollar figure for the repairs that are needed and where those funds are going to be applied. For example, if the loan is for $4 million, how much of that is going to the purchase of the asset and how much of that is to make repairs? And what type of repairs do we need? Make sure that you don't use more than you're asking for. Lastly, I want to know what the exit strategy is, or how you or the borrower intends to cash us out. Will they refinance or sell? And of course, additionally, we'd also like to know what the occupancy rate is.
Thank you for that detailed explanation there. Can you tell me about how the folks on this call can make money working with Behana Capital Advisors? What's in it for them?
Sure. The beauty of the program is that you don't have to have good credit or money to find deals for us to fund. If you're not experienced buying commercial real estate, the best way for you to get started is working closely with funding sources such as ourselves. As in any real estate related business, referrals are a big part of our deal flow. Individuals that refer deals to us that we close typically receive between half of a point to a point. So take our average deal size, for example, which is $5 million. A half of a point is $25,000, and one full point would be $50,000. This is off just one deal. Now remember, we're not interested in smaller deals. They must be over $2 million.
So the bigger the loan amount, the more you will make from a referral. I assume it is just as easy to find and close a larger deal than it is to fund a smaller deal. Is this observation correct?
Yes, that is absolutely correct. Any industry veteran would tell you of all the bad deals that they've had to close, they were always the smaller ones. I don't know why, but Murphy's Law seems to always apply to those smaller deals.
Tell me about where you get your money. How big are the deals you can fund?
Our money comes from other institutions. We are what you call an institutional lender. As far as size, well, a sweet spot is between 2 and 50 million. Anything larger than that, we can manage through our joint venture arrangements with other institutions. However, it's unlikely that deals of that size really come across our desk, as most Wall Street firms will fund those before we do.
Do you do development deals?
Currently, no, we do not fund development deals. We only fund deals on existing structures. Remember, however, development is not the same as rehab. We can fund rehab.
That is a point that is often confused. Thanks for clarifying that. Regarding parts of the country, where do you typically fund?
We only like to lend in larger cities, or what we call Tier 1 cities. These are larger cities, and a list of these cities can be found on our website. Also there are our lending parameters on what we are currently lending on.
One last question, Richard. For brokers and people that have deals that need funds, how can they get started today?
Well, the best place to get started is our website, www.behanacapitaladvisors.com. You can fill out the Contact Us form to be contacted or submit a deal under Request Commercial Loan. Our current lending parameters are there also. All of this is on our website. You can also find us on Facebook. This is the best way to get started with our capital group today.
Again, the website is www.behanacapitaladvisors.com, and you can also look them up on Facebook. Richard, I'd like to thank you for talking with us.
Well, thank you, Michelle, for having me in today. I hope I was able to answer your questions and clarify a few things. And a special thanks to the listeners. We hope to be doing business with you soon.
Thanks, Richard. Well, that's the end of our discussion for today. Hopefully it was informative for everyone. As always, it is better to be ahead of the game than behind in the game.